Right, and glad you could join us on your weekly most comprehensive look at the world of business, finance and economics. This is Business Redefined, a special budget 2023-2024 edition. 2 days from today, Treasury Cabinet Secretary Professor Njuguna Ndung'u should be tabling Kenya Kwanza's maiden budget at 3.68 trillion shillings spending plan. I always like to clarify that is exclusive of the 850 billion shillings worth of debt redemptions. We always have a debate in this country about the size of the budget. That should rest that case. And tonight we want to delve deep into issues around the macro side and the tax revenue mobilization side as well. And importantly, I have three distinguished panelists with me. I have Alex Kanyi, who is a tax consultant, Sandeep Main, who is also a tax consultant from KPMG, and I have Wangari Mukia, who is not new to us. She is a public finance specialist who will also be helping us to make sense of the macro fiscal side of the budget. Today, something very important has developed. We were expecting the report of the Finance and Planning Committee on the Finance Bill 2023 to be tabled in the House. It happened late this evening, and the chairperson of the committee, that is the Molo Member of Parliament, Honorable Kuria Kimani, has given a very brief snippet of what we should expect. Let's listen into some of the things he said as far as the changes the committee has brought into the finance bill are concerned. Let's kick off with that.
One of the many issues I know that has been very contentious has been the proposed 3% housing levy. We have proposed that be reduced from 3% to 1.5% employee contribution and 1.5% employer contribution. We have, yes, agreed to increase the VAT on fuel from 8% to 16%, and I would like to explain why. We have zero-rated LPG gas, we have zero-rated LPG cylinders. So both the gas and cylinders are now going to be zero-rated, and we are hoping, and we are really cushioning these particular companies, that they are going to extend that particular benefit to Kenyans. The digital content creators, again, was a very contentious issue that came up. The proposal was to increase the withholding tax to introduce a withholding tax on digital content creators at 15%. We are going to treat digital content creators just like all the other professionals at one standard rate withholding tax of 5%.
Right, that is the chairperson of the Finance and Planning Committee, Honorable Kuria Kimani, very good friend of mine, the MP for Molo. Let's start from that point, and I'd like to know what my panelists think. And let me start with Alex Kanyi. The housing levy has been such a contentious issue in this finance bill debate, from 3% to 1.5%. Do you think that's a favorable halfway house, given the uproar we got from the public?
I think it's good progress. Starting from the 3% to 1.5%, I think it's a good thing. They could perhaps have done better, but just quick to caution that the proposal from the departmental committee is just a proposal, so things could change on the floor of the House. And I'll give you an example that last year, Finance Bill 2022, CGT proposed that capital gains tax to be increased to 15%. Then the House said, I think, 10%, but the floor of the House actually said, let's go back to 15%. So I think I want to wait and see what actually happens, even with these proposals. All right. Sandeep, your thoughts?
Yeah, thanks for that, Julian. And in my opinion, as Alex has rightfully mentioned, these are moving targets. So today, and you rightfully mentioned, they change every single day. But specifically on the housing levy, it is good progress to bring it down from 3 to 1.5. But I think there's still a lot of demystification that needs to happen. You know, what interest rate, and the current finance bill talks about an interest rate, but it doesn't talk about how much it will be. And maybe to further demystify the housing levy, the fund that comes in is going to be used for construction of houses, right? But the houses are not free. If you look at that website, I think called Boma Yangu,
yes,
you have to actually pay a deposit. You have to raise a deposit. Yes.
Yeah.
So it's not a free house, and then the person occupying that house will have to pay it over a period of time, whether it's mortgage, whether it's you know, government funded, or whatever period of time. So the important thing to clarify is that even though we are collecting this 1.5 or 3, whatever it is going towards a construction fund, hopefully.
Yes.
That is the idea. But it's good progress. It's come down to 1.5. I do hope the cap remains the 2525, and it's not unlimited.
Yes.
But let's wait and see what happens.
The key word in what Sandeep has said is the word hopefully. It will go to a construction fund. And it's important to clarify, by the way, that the housing fund is meant to guarantee offtake for developers. And that's the point which Sandeep has been trying to put across. Let me come to Wangari Mwike here. And Wangari, now, looking at the concessions that have been arrived at, and we haven't seen the full report, so let me not assume things here. And the question I've been asking myself is, if government is conceding on so many grounds, how do we plug in the revenue hole that is created?
Well, I think even just to comment on what you talked about, the housing levy, I think they're missing the point. I think there shouldn't be a fee or whatever you call it, a levy at all. They haven't really thought through where is the money going to go to, who should be eligible, whether people even want to have a house, what happens after the 7 years, when you get your money back, is it with interest? And we also know government is notoriously very difficult to get money from. So even if they say you're going to get your money back, I think they said 30 days or something like that. We all know how our government works, and I know it would be very challenging to implement. So I don't think it's time to do the housing levy. I don't think this is a priority for the government. I know it was in the Kenya Kwanza manifesto, but there are a lot of other things that they should be concentrating on. I think the housing levy really should be thrown out the door.
Okay.
Other things like, they talked about the digital content. I agree with that. I think people who are doing business in Kenya should pay taxes. I think 5% is an agreeable rate. 15% I think is quite challenging. I just don't think they're going to raise that much money. I mean, how many influencers are actually making boatloads of money in the space? But I do recognize it for what it is in terms of you have to start somewhere. And as a space begins to grow, Kenya is a digital silicon savannah, I think is what we call ourselves. So this sector is actually expanding, and it's good to put in place a framework for taxation now. So I understand it, and I think it's room for growth. But in terms of financing the bill, where are we going to get the money? Well, the housing levy, first of all, was not supposed to be a place where you get the money, right? So I think that we should disabuse ourselves of that notion. But I think things like the VAT on petroleum goods may be somewhere where you're going to get significant revenues. I know LPGs is not included in that, but I think some of these inelastic expenditures, such as that, will be part of the bulk of the money.
And for the avoidance of doubt, when Wangari Mwike talks about inelastic expenditure, she means whether the price goes up or down, your consumption remains pretty much the same. She's an economist, and that's why she can easily flow with that. Gentlemen, VAT on petroleum products, the Finance and Planning Committee has said, look, we have retained it at 16%, but here is the trade-off. We have proposed zero rating gas cylinders as well as gas itself. Do you think that's a favorable bargain, Alex?
Not necessarily. In fact, just before we started the show, I was asking myself how many people actually buy gas and the vendor actually puts VAT. Just think about it. When is the last time you bought gas and there was VAT on it? So will there be really a difference when you buy gas next time? I don't think so, because I think the guys will still retain their margins, and perhaps the benefit that the government thinks will get to the final consumer might not get there. So I don't have a very good feeling around it. And when you talk about the VAT on petroleum, when I was making submissions to the departmental committee, I was concerned around the number of taxes that you're actually putting on fuel. So talk of super going at 182. Out of this 182, you have 64.5 shillings being just taxes. Now add the 8% extra VAT, so that it is now 16% VAT on the petrol. It means, it's becoming crazy. You're going to pay perhaps more than 200 per liter when you're purchasing petroleum the next time. And then there's the knock-on effect. You have industries that are depending on fuel to perhaps power their generators, etc. And then if you talk about this government, which is looking at, guys who are down there, low-income earners, you have your boda guy. Is he going to charge 100 bob now that the price of fuel will go up? And if he's going to charge 100 bob, how many people will he be able to carry? How much will he be able to make? So I don't think it's also a good idea. Perhaps we should have stayed at the 8%. Yeah.
All right. Before we take a very quick break, Sandeep, your thoughts on this in a minute.
So in a minute, it's a good move to zero rate LPG if it comes into law, because that is ideally meant to reduce the cost of the end product. The gas, like Alex talked about, it's a one-off cost. The cylinder is a one-off cost. You buy it once and then you keep replacing it, so you don't pay unless you lose. Yeah. The gas going down could potentially go down, but like he mentioned, I buy my gas from a micro entrepreneur who doesn't give me an ETR invoice or doesn't give me a receipt.
Yes.
So how would I know unless it's controlled upstream? Maybe I buy gas at a petrol station and ask them for a receipt. It's a different conversation. So the impact that he's referring to, I think, makes a lot of sense. But looking at it from a regional perspective, Tanzania, exempt. I think Uganda, exempt. Rwanda, zero rated, fuel, yeah. VAT on fuel. Why have they done that? The whole idea of making the cost of fuel cheap is to spur economic growth. That is where I think we need to think carefully through this increase from 8 back to 16. And that would really inform now how we actually generate additional, products or whatever it is. But looking at it differently, maybe the government could think about sustainable energy.
Yes.
What are we doing about solar? What are we doing about wind? And we do have a number of wind farms that have then plugged into the national grid. Is there accountability? Do we know how much power is coming out of wind energy? Why must I be charged for a few costs if that's not happening, right? So I think these are some of the things I was hoping to see through the finance bill, which have not really come through. In fact, quite the opposite. If you look at sustainability, that would be key in the future of this country.
All right, and that point by Sandeep takes us to a very quick break. We shall be right back now, focusing on a lot more issues, including the proposed changes on turnover tax. There's been so much interest on this, especially from the small businesses. Stay tuned. Welcome back to this conversation on Business Redefined. We are talking about Kenya Kwanza's maiden budget, which should be tabled on Thursday by Treasury Cabinet Secretary, that is Professor Njuguna Ndung'u. Before the break, we took some reactions from my panelists on the proposed changes by the Finance and Planning Committee as far as the finance bill is concerned. And one of the proposed changes which has really stood out is on matters regarding turnover tax. And as you'd imagine, the interest here is MSMEs. So let me start with Kanyi here, and then I'll come to Wangari. Initially, currently we are at any business within a turnover of 1 million to 50 million shillings is eligible for TOT. The finance bill proposed restructuring this to 500,000 shillings to 15 million shillings annually. And now the proposal is to have the floor at 1 million, but then the ceiling comes down from 50 million to 25 million shillings. Alex, what do you make of this?
I think this is one of the things that I support in terms of increasing the threshold. We've done some maths to just check if you target someone who's earning 500K in terms of just turnover, you're targeting someone who's getting about 1,300 and thereabouts Kenya shillings per day. So I thought that threshold was a little bit too low, because that will be, again, your mama mbogas, and you don't want to drag them to the turnover tax. Perhaps you get another model for them. So raising the threshold now to about 1 million, and then the upper one to 25 million, I think it's a welcome move, so that anyone then earning above 25 million, then you get to your 30% tax as usual. So it is a good thing. But I also note that they are silent in terms of the rate. So the bill proposes to increase the rate from 1% to 3%. So I guess the guys who will be caught within the bracket will suffer a little bit more because of that increase in rate. And just to track back, we had the Tax Laws Amendment Act sometime in 2020, which then took us back from the 3% to 1%. So it looks like this is the time they're reversing it, so that we move back from 1%, then go back to 3%. So kind of reversing what they gave us as part of the COVID measures. So I think it's something that I would support, the 3% plus the revised threshold.
Sandeep, let me come to you. The counter narrative to what Kanyi is saying in terms of the 500,000 shillings being a turnover of 1,300 shillings a day, if you read the MSME Act, the SME Act of 2012, it defines a micro and small business as anyone whose turnover is about 500,000 shillings. And we've had a perennial discussion in this country that we need to bring these guys into the tax net. So perhaps, to be fair to the government, how do we expect them to rope these businesses into the tax net if we keep on having them sit ground as far as turnover tax is concerned?
You know, Julians, there are very diverse views on this. First, turnover tax is a simplified tax regime, if you get that. So you pay that currently the 1% on your turnover and you're done. You don't need to maintain accounts. You don't need to do anything else. You pay the tax on a monthly basis, you're done, and you move on. The challenge, I think, that comes even with the current threshold of 50 million or the revised of 25 is that the VAT threshold itself for registration is 5 million shillings. So whether you just pay turnover tax at the 1%, you're still required to have books of accounts. You still need to file your VAT returns if you meet that 5 million annually currently. And that's how you have to continue maintaining and filing your returns. But bringing it into the TOT discussion, remember you can opt out of it. It is not mandatory.
Yeah, correct.
So whether I do $500,000 as a base, and the idea for the $500,000 was to expand the tax base, as you've rightfully said. What would be the other cure? I think we had a discussion around presumptive income tax. That was shelved. It didn't work. Why did it not work? Because I believe maybe the way it was implemented was not right. The counties, between the county government and the national government, had not agreed on proper, regulations on who is going to collect this revenue. So I think if that comes into play, and you're told that the county governments will be the ones to collect the revenue and subsidize the disbursements they're meant to receive from the national government, would motivate them. If you then bring in, and remember, today, time and age, you're talking about data.
Yeah.
It's not about who's paying tax and how do you get that? It's about data. So bringing in different MSMEs into the tax loop is just by giving this smaller, presumptive income tax. Let's do this, you pay 15% or a percentage of your license fee, then I have your data. Integration of systems is where now you get more data. And recently you must have seen Kenya Revenue Authority, not very recently, but they had listed a number of PINs that they're going to refuse to deregister because they're saying you have outstanding taxes. What used to happen before is that you deregister a company with the registrar of companies and you're done. You are no longer existing legally. So KRA is now saying, no, we're going to re-register you and you must shut down your PIN with us, wind up the entity properly, end to end. So I think for me it would be scenarios such as that. How do you collect data? How do you increase a small amount of tax, then bring people into the tax loop, do away with this? And turnover tax for me, I don't think really worked well. Most people, if I'm running a business of $500,000, my costs possibly for the year could be $1 million. I would rather opt for 30% and not pay tax and say I'm in a loss-making business. Right.
I see. Wangari, let me come to you. And if you look at data from the Kenya National Bureau of Statistics, 8 out of every 10 jobs in this country are created in the informal economy, the bulk of them being the small and micro ventures. When you look at the proposals now coming from the Finance and Planning Committee, do you feel like it's a step forward or a step backward?
Well, I think even just to speak on what my colleagues were speaking about earlier, the proposal, the ban proposal, first we started from 50, I think it was 500,000 to 50 million, and then we went from $1 million to 15, I think, and then we went down to 1 million to 25. Yeah. So it just really feels like, I don't know if they really thought this through. Whether there's a real analysis that has been done. I hope so. I hope someone has done the figures and seen that, that the amounts that will be collected. But then when you think about the mama mbogas, you think about, the micro enterprises, this group of people, I mean, in any tax regime, you have people who are exempt, people who can pay, and then, it graduates, for example, if it's progressive income tax, right? So if, in some instances, because some of these mama mbogas are already paying cess to the county governments, they're paying market fees, I think there can be some idea around exemptions for some of the brackets, and then you start graduating that further. But I think one thing that this points to is, I think this one thing that the Kenya Kwanza had also talked about is that we need a tax policy. We need some sort of idea or some sort of predictability when it comes to taxes. We can't be having one swing one way 1 year and then something completely different in another year. I think it's quite disruptive. And I think a tax policy, and I think they talked about a medium-term revenue strategy, would be quite welcome. I don't know if they will actually do it because it kind of locks your, it binds your hands. Yeah. But I think that would be a welcome move.
And to be fair to the National Treasury, we have actually seen 2 drafts of the National Tax Policy. The first one came out in July 2022. The second one came out on the 28th of April. Actually, that's when it was tabled before the House by Majority Leader Kimani Ichung'wah. And on that note, Alex Kanyi, when you look at the finance bill, vis-a-vis what we have seen so far in the draft National Tax Policy, do you see a measure of alignment between the two?
Good question. And in fact, before we go to, let's first start with that, and then we'll go to that discussion of data, missing data. I think they're speaking to each other. I've looked at the draft national tax policy that was presented at the House. So, speaking to certainty of taxes. So you have, for example, inflationary adjustments for excise duty, which we hope will not see anymore. So that is consistent with the draft national tax policy. However, on the other side, you have the draft national tax policy speak to zero rating exported services. Yeah. But what do you see in Finance Bill 2023? We're talking about exemption for zero rated services. So there's still a mismatch there. So with time, I think they'll continue to speak to each other in terms of the documents that we get in Parliament. You also have, for example, this tax they want to introduce on repatriating income for branches or foreign companies. So they don't mention the rate within the Finance Bill 2023, but when you look at the national tax policy that was just presented, that's where you get the 15% rate on repatriated income. So I think with time, these documents will continue to speak to each other, and I'm hoping that finally we'll have a national tax policy.
Sandeep.
Yeah, no, I think Alex has covered most of it in terms of alignment of the national tax policy and the finance bill. I think my concern is that it is a policy. Remember, it's not legislation.
Yes.
Right? Policy gives guidance.
Broad guidance.
Broad guidance.
Yes.
And there's nothing that stops the National Treasury or the government from making changes that are not in line with the policy. So unless you have something anchored in law that would then give that national tax policy the attention or the weight it deserves, then I think we're just going to be going around circles again. But looking into the future, I think it's a good idea to have that stability, for the next 5 years. I think you talked about 5 years. So those are my thoughts, Julian.
All right. Yeah. Let's talk a little bit about the macro numbers. On Wangari here, you come in. You look at the spending plan for the next financial year. Total target spending plan is 3.8 trillion shillings, 3.68 trillion shillings. The target revenue is 2.8 trillion shillings. The amount which the government seeks to finance through borrowing, both domestically and externally, is 720 billion. The Central Bank of Kenya has come out and said, look, when you look at a borrowing plan of 522 billion shillings domestically, we don't see the domestic capacity to mobilize those funds. Wangari, are you concerned by our borrowing plan for the next financial year, or how do you assess it?
Yeah, I think, it's quite ambitious. I side with the central bank. But, the market can be quite surprising. And if you provide the right incentives, the right interest rates, which I think they're going to have to do in this economy, if they want to, in this context, if you want to attract that kind of money, you're going to give really good rates, right? But then, of course, that is a follow-on effect. If you give really good rates, and you have to have repayment periods that are upcoming is to come to bite us going forward. So I struggle to see how they're going to be able to do it, but I think it's in line with kind of the aggressive nature of the finance bill that we have that our president has in place.
All right, Alex. This financial year, the current one, 22-23, we are very certain KRA is going to miss its revenue targets. If you look at the next financial year, the ordinary revenue target is actually 2.5 trillion shillings. That's about 400 billion shillings higher than the current financial year. Yes. Are you that optimistic, Alex?
No, I'm not optimistic. And the reason for this is I think we did an analysis as at end of March. I think we had collected about 1.4 trillion in terms of tax revenue against the target of 2.1 trillion. So as at March, we were 0.7 trillion behind. Yeah. Giving just a few months to recover. So I think we're going to miss that particular target. Looking at the following year, and the government is saying they want to collect what? 2.8 trillion.
Correct.
From our taxes. Will they make it? I'm not too sure. But I'm hoping that things like e-Teams, for example, electronic tax invoice management system, will help to perhaps get more people within the tax bracket, so that if, for example, you are doing business and now they will actually disallow any expenses that are not supported through those invoices from the electronic tax invoice management system, we might find more people coming into the tax bracket and hence more taxes. But even with that, I think the focus should be on spending. Really, is it
rationalization of spending?
Rationalization of spending. Should we every year be increasing the budget, increasing the tax targets, or should we look at ourselves and say, where are our loopholes? Which ones can we close and perhaps do better in terms of collecting the revenue? I'm thinking that's the bigger discussion, and I've heard at least some MPs aligned to the government say they are certain that if they close those loopholes, they actually don't need to increase taxes.
Yeah.
And they will meet actually 2.9 trillion, which is just slightly above the 2.8 trillion that they are looking to get.
I'll be coming back to the issue of fiscal consolidation a little later, but let me come to Sandeep here. And I was speaking to a policymaker in this country, and they told them, because I mentioned that I'm not as optimistic as they are as far as revenue mobilization is concerned, and they told me, you guys really underestimate the cleanup we're doing on the VAT register and the switch to e-teams, and as well as the transition to real-time collection of taxes. We have just been piloting the betting sector.
Yep.
We have seen what can work. Sandeep.
Yeah, thanks for that, Julians. And I think maybe before I answer that question, let me weigh in on what Alex is saying. Let's understand one thing. When you do not meet the 5 million shilling threshold, you are not required to register for VAT. What most businesses are doing when we are trying to support the MSMEs, buying tea, milk, coffee, some small snacks here and there, we do not really get an ETR receipt.
Yeah.
Are you going to punish a business for supporting an MSME who is not required by law to register for VAT by not allowing them to claim that as an expense? I think that's a fundamental issue here. If we now start telling companies, stop, we're not going to allow expenses, might not be very significant, but they are. Some could be significant, right? Yeah, yeah. And we tell them you cannot buy, we're not going to allow you this particular credit because you do not have a ETR. What's going to have a ripple impact is going to be they're going to stop buying from these MSMEs and go to supermarkets or people who are registered for VAT. So I think that again is going to cause a bit of an issue in how we're trying to spur economic growth. One. On the issue of the withholding tax that you mentioned, the Revenue Authority has actually piloted this with the betting industry. The betting industry is a very different industry. It works on cash, all right? Immediate cash. But businesses have a number of invoices that they do process probably every day or every month that would be subject to withholding tax. They can possibly not do, and I see one of your proposals, I think you shared is 5 days.
Yes.
Still not workable. 24 hours or 5 days does not work. You need to make it the following month, 20th of the following month, and there are reasons for that. If you recall, there was an initial case, I think the Fintel case, that ruled that withholding tax should be paid or remitted on payment.
Yeah.
And that KRA appealed, and now it's the earlier of accrual or payment. So if I accrue without having paid my supplier, do I have to pay the withholding tax? But then the provision here talks about payment. So there's already a bit of a misalignment, I think, between the existing legislation and what's being proposed. But it is my prayer that maybe, as Alex said, things can change between today and budget day, that they say that, fine, let's retain it at 20th of the following month.
Sandeep just reminded me, one of my university lecturers used to tell me that many Kenyan businesses are invoice rich but cash poor. That's the problem of the
That's a very good. That's a very good point. Cash flows.
Absolutely. Wangari, let me come to you on the fiscal consolidation. Many players in the policy space have argued, how do you guys expect us to engage on contractionary fiscal policy where we are cutting on spending in an environment where we are essentially dealing with an economic downturn? And I think they have a point. How do you respond to that?
I think what is trying to happen here, and I think it's clear that all the signals are, through fiscal consolidation that actually started from last year and some years back, where we have high inflation, right? I think it's around 8% now, around 8%. We need to rein that in. Currency is also out of control. And we have, excuse me, a large deficit. And so all those signal to, we have to consolidate, you have to go into fiscal consolidation. That is going to slow down the economy for sure.
Yeah.
But I think in order to kind of rein out these macro indices and for the economy to then bounce back and spur economic growth, we need to manage the inflation, and we need to make sure that it's reined in. So I think towards that direction, fiscal consolidation is the way to go. We've been doing it for a while. I think it's going, like you said, it is going to affect the economy, but I think in the long run, it's going to be for the best.
Okay. Any chipping on that? You're the one who actually initiated the conversation about trimming expenses. And the policymakers will tell you, look, the environment is very different.
Yeah.
And there's a reason why, for instance, initially in the IMF program, we had October 31st, 2022 as the sunset date for fuel subsidies. They weren't dialed down until May this year because there was necessity for that headroom for these adjustments.
Yeah.
Yeah.
A fair point. But at the same time, I think we must get to the budget line by line.
Yeah.
So if, for example, you tell me you're going to increase the budget for State House or increase the budget for Office of the President by X amount, and at the same time you want to tell me I want to tax you more because we don't have money. So to an ordinary Kenyan, I think that ceases to make sense. If you're going to spend money on perhaps things that you do not consider to be priority as an ordinary person, then you also hope that the government won't be so hard on you in terms of increasing the taxes. Yeah, so I think it's time we have that discussion. I think for the longest, the focus has been on the finance bill and the taxes. I think at the same time when the departmental committee was collecting views on finance bill, there was also a departmental committee that was receiving comments on budget. I'm not sure how engaged the public was around the budget, but maybe it's time we also get involved in that.
All right. At Keep Maiwa on Twitter is asking, at Amboko JH, will the 5% withholding tax for content creators be final tax, or they will still have to compute liability at the point of filing returns? Your answer is in the latter point, but let me allow the experts to come in and weigh in on that point. It actually won't be a final tax, but Sandeep, take it away.
Yeah, thanks for that, Julians. And I think this is very interesting. When this came through, you know, the proposals and 15% was what was initially proposed. I did see that, you know, it's going down to 5%. The question is, this is an advanced tax. That's how withholding tax works, especially as introduced under Section 35 of the Income Tax Act. So the idea is that you will, the person paying you will withhold 5% of what they need to pay you, and then you still will be required to file your annual return. So this is what I think is, it is a good move because we're trying to increase the tax base, but whether it's a win for the you know, content creators or not is yet to be determined. Because this is an advanced tax and you must then ultimately pay 30% end to end. So yeah, the 5% will just go to reduce what you have to pay net of expenses, obviously. Yeah.
The 5% brings you to the rate of KRA essentially, but Alex.
Yeah, that's basically the point. So I think the digital content creators were focused on the rate of 15%. Oh, it's so high, we want it reduced. And then the government was like, okay, fine. We're going to reduce it for you. What you don't know is that the next time they're raising an invoice to someone for whatever marketing they've done on the digital platforms, when that person actually withholds the 5% and remits on their behalf to KRA, KRA on the other side will be expecting the other percent, meaning that you're now in the radar for 30% tax actually. So is it a win? Maybe. For the government.
It's a win for the economy.
For the economy, yes.
All right, let's take a quick break. We shall be right back with a lot more on this conversation, focusing on Kenya Kwanza's maiden budget. Stay tuned. Welcome back to this conversation on Business Redefined. As you can tell, it's quite lit here. My panelists are going at it even off camera. And let's get back to our conversation on Kenya Kwanza's maiden budget. There's a question here on Twitter. How come you guys are not having a conversation about 35% tax rate for 500K shillings and above? Who would like to go first, Wangari?
I think, you know, even thinking about the 35%, and I think it was revised. If I'm not wrong, I think the band is about
revised,
500 to 800 is 32 now, and then over 800 is 35, if I recall correctly. But what percentage of Kenyans are earning that amount?
Very small. And
what is the government hoping to earn from that tax? I don't see the point. I don't see why it's there. Maybe it's just a signal to say, you know, as we are doing the turnover tax, as we're taxing the MSMEs, we're also trying to get the higher brackets. But I don't think it's it's not something, a revenue stream that is really significant, and I don't think it's here or there.
But Alex, and to Wangari's question of what's really the end game here, it has been mentioned to me that the idea is let's test the acceptability of this tax rate. If Kenyans let it fly with this one, we can cascade it to other income levels.
To me, I look at it differently. And the end game being that we already know, or KRA knows who actually gets 500K and above. So it's an easy thing for them to just increase the rate and get the tax, as opposed to other tax measures where they have to really think hard. For example, housing fund, where do we get the money from, etc., etc. So it's basically the government saying we already have the data, just increase this to 35%, and we know we have X in terms of tax revenue. Yeah, so it's a low-lying fruit, if I may call it. So to them, I think they want to just collect without stress. But I know people are pushing back to say the same guys who are being told to pay at 35% are the same people who are supporting guys in their rural homes. They're the same people who perhaps have to go to private hospitals. They're the same guys who have to take their children to private schools. So basically, they don't have that much disposable income, if I may call it so. And it's something that the government should actually think about. The good thing is that even the members of parliament will be in this, and high-ranking government officials will be in this, so they'll also contribute, hopefully, and I know Sandeep will have some comments around whether they'll contribute effectively.
I thought you were going to say Sandeep is contributing also.
No, Sandeep will mention whether they contribute effectively, yeah? So, so it hits across. Will it pass now that it's going to the floor of the House? I think let's watch.
I see. Sandeep?
I think 3 comments just to add to what Alex is saying. And I think Wangari made a very good point, the impact. But we're looking at it from an employee perspective. Remember, we have other, like partnerships or sole proprietors will also fall under these graduated scales. So if you're a general partnership, then you pay tax as an individual based on the allocation. So I think the aim is probably not looking at just the people who are employed, but maybe widen that particular bracket and say if you're a sole proprietor, ideally I'll pay tax at 30%, installment tax is based on that as well. But now there would be some sort of inequality. If there's a company offering, say, consultancy services, and then you have an individual offering consultancy services in their own name, the individual would then pay 35% if it's $500,000 and above, and then the company would still pay at 30%. So I think there's a bit of inequality between individuals or sole proprietors, not only just employees, and then looking at it from a business perspective. But the other comment is really around the employee. So here you are talking about $500,000 and very few people earn that going above. Fine, an incremental of 5 or the 2. I don't have any documents, so I can't really confirm whether it's 2 or 5 apart from media, Julian's.
Yeah.
But so there's that 5%, and then you look at the proposal on NHIF, 2.75%. We are not talking about it.
And it's not capped.
It's not capped. That's the most important thing to understand. The 2.75% is not capped. That's a significant increase based on your basic.
Yeah.
Then you have the NSSF dynamic, the substantial increase as well. So the question to ask is, what really will I take home if all these come into play all at one go? Employers might not necessarily increase your salaries. What will people do?
Yeah.
What will employers do? Do we see retrenchment into the future? Do we see a drop in actually that particular income collections from that 35%? Because maybe employers will say, fine, if you can't work here, this is the best I can do. You look for the other avenues to support yourself and your family. So I think we have to look at it holistically. It's not just the one issue, the 5%, which might be minimum for a very small percentage. It's the bigger picture. NHIF 2.7%, NSSF, not finance bill conversations, Julian's, but impact on the individual, cost of living. Yeah, and spurring the economy.
I see. There is a question here I'd like us to respond to, and I think this guy must have missed our earlier conversation. Alex, maybe you could take this. He's asking, why is there so much hue and cry around this 24-hour tax remittance, and yet they are just simply remittance agents? Companies are not meant to retain tax. They simply get it and remit. Of course, there's a point being missed here, but just explain it for us.
I think to me is the administrative cost of doing this. So, and the penalties that would follow, by the way.
Yeah.
So, how do I then make sure that every time I get an invoice and pay, I ensure that I account for withholding tax within 24 hours?
Yeah.
Does it mean that I employ perhaps additional persons to just keep track of that? A ledger, for example, to just keep track of that? I think that's a little bit complicated. And then look at the penalties side of it. I think when you go to our iTax platforms, every time you miss your due date, the platform actually calculates the penalties like almost immediately.
Yeah.
So you could be a small business and you don't have much in terms of just ensuring that you do this withholding tax within 24 hours, but you get punished heavily. And you compare that against large corporates who perhaps have resources to invest, money to invest into these administrative things. So it's quite an unfair burden at this point. So I actually like the proposal that we are seeing circulating to say perhaps we change to 5 days, and I still don't think that 5 days is enough. But we'll see what comes out with the bill.
Wangari Mwinki, listen to this. Julian, I saw you tweet that the debt service is 1.63 trillion shillings in a 3.68 trillion shillings budget. Is that really sustainable? 1.63 in debt service, and yet the budget in entirety is 3.68 trillion shillings. And the Kenyan here is actually particularly concerned about the amount going to debt service obligations. Do you share this concern?
I mean, yeah, definitely. I mean, almost all our money that we're trying to raise is going to debt servicing, right? How are we going to be able to fund the budget?
Yeah.
So definitely, debt servicing is a big issue, and I think that's also part on the back end thinking about fiscal consolidation, and that's the reason why we're trying to rein. I think this is what the administration is trying to do, to rein it in. But if we continue with high debt servicing, domestic debt is very expensive now. External loans, we are a middle-income country, we can get very good concessions. The IMF gave us money the other day. Ghana, on the other side, is defaulting. I think it's a very tenuous situation. So I think it's something we really need to be worried about. We need to keep an eye to. We need to rein the debt in. We need to manage expenditures. And I think what you said earlier, Alex, is quite important when you think about, we need to look at the expenditure side. And one of the key things that Treasury is doing is around the standard chart of accounts. The standard chart of accounts essentially is how you track each financial transaction within government. But the standard chart of accounts right now has not been updated, and it doesn't track every single transaction. So even tracking every single transaction within government and trying to understand what was spent where is very difficult. So going back to expenditure tracking, making sure that we don't have issues of budgeted corruption, which is rampant, I think is quite important.
All right, and Wangari has mentioned, we've been having a perennial conversation about the need to transition from cash accounting to accrual accounting to address some of these challenges which are being raised here as far as you're concerned. There is a question here being asked that, is the finance bill really that bad? Now, let's talk about some good stuff here. Pay to play has actually been dropped based on what the chairman has told us this early evening, the mandatory deposit of 20% in case you want to appeal. Sandeep, are you excited about this?
Well, definitely, I'm very excited about it. It was part of the KPMG submissions as well to have that drop because of and I know many other stakeholders did the same. And the primary issue was obviously around the constitution, the right to justice.
Yeah.
But I believe that where the government was coming from is what's happening in our neighboring, countries. Tanzania have it, I think 33%. Uganda too have it, but I believe you can negotiate on how much you need to pay, as you settle your dispute. Yeah. I think the challenge of this one was really in the inverse. Some of the disputes arise because of VAT refunds, where the government owes you a refund but has disallowed it, and then you now go to court. Will the government also have deposited the 20%? Anyway, glad it's dropped. It was much needed cash flow. So businesses, I can tell you, the MSMEs could not really afford, that 20% sitting in an escrow account. And then I think the whole conversation around credibility and trust. Yeah, that's where I think the general public is coming from. And not to digress, but I don't know if you managed to see a provision within the finance bill exempting public service officers for any amount that they so wish to spend on assets, and talks about assets, notwithstanding the ownership. Yes, I think that's a major challenge, not talked about because of the housing levy,
which is drowning everything else.
Drowning everything else. But I think accountability, building that credibility and trust from the government side towards the public, is very important for us to manage, how we actually, how the taxes are being used. And I think this one falling off would be a great thing. And I do hope nothing changes between now and and by the time it's actually an act. Yeah.
But Kanyi, the question is this. This is not the first time we are seeing this proposal. It was in Finance Act 2022, and at the time it was actually at 50%. What message is the government sending through this repeated proposal? Never mind there is judicial precedent throwing it out.
Yeah, I think they might just try it again, Finance Bill 2024. But in terms of my comment on it, I think it's a good move to drop that particular proposal. It doesn't work well. But from a practical perspective, having been in tax dispute resolution for a while, you lose against the Revenue Authority at the Tax Appeals Tribunal. You want to appeal to the High Court. When you're appealing to the High Court, what will normally happen is that at the same time, there will be someone rushing to actually enforce the decision of the tribunal.
Yeah.
And as they are rushing to enforce that decision of the tribunal, you're at court now telling court, please stay this enforcement because I am actually appealing to the High Court. So what is the normal compromise? The normal compromise is give us security that you are able to then pay whatever disputed amount KRA wants to collect. So there's what they want to do in the law, but what is actually happening in practice. When you appeal from High Court to Court of Appeal, again, if you've lost against the Revenue Authority, the bargain will be put up a deposit.
Yeah.
So in actual sense, it is happening. It's only that now they put it in the law for everyone to see and perhaps object. But when you go to court, that's what's happening on the ground. But there are other things which are positive. For example, you have the tax amnesty program, which our firm actually pushed for when we were submitting comments to the National Treasury for things that they would include in finance bills, which is a win because you have the voluntary tax disclosure program, which is coming to an end. And then you have this tax amnesty, new tax amnesty program, which if you pay your tax liabilities by 2024, I believe, then they waive those penalties and interest, which is a good thing. There are other two things, actually three, which I'd want to mention, which are positive, and very quickly. You have 1 year for KRA then to look at your application for tax refund, and it's broken down in terms of 6 months for them to do an audit, and then 6 months to actually refund you. So what would happen is that you would have an audit that was endless, but now that getting capped to 6 months to finalize the audit and 6 months to pay, it means that you then get your refunds faster. And finally is the excise duty on things like telephone and internet and money transfer, which are getting reduced from 20% to 15%. Those are positive things within this finance bill, and rental income tax and whoever it benefits dropping from 10% to 7.5%. Those are positive things that you could mention from this finance bill.
Right, and that point by Alex takes us to another break, which I'll be back now with the tail end of this conversation, where I will now be sampling some of the questions you are throwing my way for my panelists. Stay tuned. Right, welcome back now to the final leg of our conversation on Kenya Kwanza's maiden budget. We have been unpacking the raft of tax measures being proposed and the changes which have now been floated by the Finance and Planning Committee. Now, this is the final leg of our conversation. Let me start with Sandeep. Sandeep, you had some thoughts around what Alex had just mentioned before we took a break.
Yeah, thanks for that, Julian. I think Alex made a fair point in terms of the amnesty, but I don't think we're looking at the flip side of it. So the provision to apply for a waiver, and I think it's very important to understand, has been deleted, which means post 2024, what happens? We are human. In spite of using technology, errors might occur. And the challenge that I have is that if, and I think you talked about the future collections of revenue, they might achieve it, because if today I get an assessment of 100 million, if I'm in 2024, given the Intuplum rule, hopefully capped to another 100 million, 200 million is what I'll owe the Revenue Authority, because I cannot just pay the principal, enter a payment plan if I don't have the 100 million. I now must plan for 200 million shillings, hypothetically, and it could go far higher or even lower than that. I think so. That's the challenge. So imagine an honest mistake being made by a taxpayer, not because they're looking to evade, and there's a very fine line between evasion and avoidance. But if it's an honest mistake and that provision is deleted, what happens? And if I cannot raise that money, I have no avenues, right? I'll wind up my business and say, auction.
All right. In the interest of time, let me cap that there and come to Wangari Mwikia, who is with us here. We have a question here asking whether the panel is concerned about Kenya's ability to service its maturing Eurobond in June 2024. Are you worried?
I mean, I'm already worried about what we're trying to collect. I mean, in essence, the budget is 3.6, and then on top of that is the 850, right? So, which is maturing, I think, is it June next year? June next year. So on top of what we have to raise for the budget, we also have to raise for the Eurobond. And, you know, the money that we received, we invested in highways, in, I think, SGR, and all of this big infrastructure. But the truth of the matter is it's not going to realize those revenues fast enough for us to pay it next year. So we're going to have to find that money somewhere. And my friends, the finance bill is where we have to now, where it is. What are we going to do?
Housing levy.
Well, that was the question.
On a light
That's why
note.
people are starting to say, this housing levy, what is it really for, right?
Yeah.
So yeah, it's a big worry. I don't know where we're going to get this money. If we think we're going to get out of the austerity measures this finance bill is bringing for us, I don't think so. We have to raise that money, and it's going to have to come from our pockets.
I see.
Yeah.
And just speaking to that point, Wangari, let me stick with you for a moment. The argument has been leveled that, look, what options do we really have as an economy as far as mobilization of revenue is concerned, considering the global environment we are operating in? If you could comment on that, it would be really helpful.
I mean, the global economy itself is in a downturn, right, where they're suffering the effects. And so even the money, external money, is not going to be flowing into the country. So we really have to raise the money ourselves and look inward to figure out how we're going to raise that money. If we're going into a period of fiscal consolidation, it means high taxes, rationalization of the budget, hopefully, that we want to see. But that means in the long run, you know, if the economy is not generating income, then even that money to pay for for fees and taxes and stuff is not going to be readily available. So it's a double whammy. But we hope that, you know, we are going to be able to figure out how we're going to, you know, especially if the economy, the external environment starts to pick up, maybe we can start seeing some movement there. And hopefully, I think the economy, the world economy does have some lights at the end of the tunnel in terms of turning around. So there could be some opportunities out there.
All right. There are two questions I've received around what really is this provision around taxation of insurance compensation. Gentlemen, who wants to go for it?
I could take it if that's fine. So putting this into perspective, I think the wordings of that particular provision itself are a bit confusing. But if I break it down into twofold, the first part talks about if the insurance company has insured the entire value, which would mean including the VAT, the tax element.
Yeah.
So in that case, it's a zero-sum game, because if your cost was 1.1, for example, you bought goods of 1 million shillings and then you paid 160 shillings as VAT, the total cost is 1.16. If you lose, and remember you've claimed the input VAT, right? If you lose, then the insurance company, if you lose that particular product, the insurance company would then compensate you 1.16. So yes, you've paid the VAT, you've claimed the VAT, sorry, but then you have also been compensated for that. So it's essentially a zero-sum game, all right? But the second provision, and I think this is very important, because 99.9, if not 100, would fall in this category, because insurance companies do not, in my experience, I could be wrong, do not insure taxes. So they would probably insure the 1 million shillings. So you have paid the 160, all right, because it was input VAT for you, output VAT for the supplier.
Yeah.
That's gone. Your total cash outflow 1.16, and then you are insured only for the million. That provision is saying that that 1 million is going to be deemed as VAT inclusive, which means, doing my math, about 137 odd thousand is what you have to then pay. So you get about, 863 as your money. But your actual cash outflow is $1 million. So you're going to have a loss of about that 137,000 shillings. So I think that's where the challenge is. And then looking at it further is now, who's going to remit that money? Is it going to be you who's receiving, or is the insurance company then going to remit it directly to KRA? Assuming they remit it directly to KRA, how do they do that? Is it going to be, you know, what they did for the betting sector is that they were generating, KRA was generating the payment registrations. And that's why, to your point, will they be generating it for everyone if it's 5 days or 24 hours? I don't know. Do they have that data? Do I record that data every day? Unlike the betting companies. So I think that in itself is where the issue is. The second element, where the amount that you're getting, remember, compensation is meant to, it's not meant to give you better or worse. It's to give you or bring you where you
were
were.
before.
Yeah. Exactly.
Yes,
What's your cash outflow?
Yeah.
A million shillings. Give me back my million.
Yeah.
So I think that's where the challenge is. The first part is very clear to me.
Yeah.
You have claimed input VAT, or you have paid it out, and now you're getting reimbursed. That's very clear.
Okay. Kanyi, there's a question here around how come this finance bill has been very quiet around sin tax on beer and cigarettes?
Well, I'm not a partaker to start with, but however, I think for the longest time we've had excise duty increases for beers and your cigarettes and conventional things that would be subject to sin tax, and there was a lot of lobbying and a lot of noise to just say, hey, government, please relax. Otherwise, if you tax us more, we just close shop and we go to another market. Yeah. So I think tied to then what we have within the national tax policy to make sure that our taxes are predictable, tied to also removing the inflationary adjustment. So it's more of, we think we've had enough of you guys, let's just give you a break.
I see. Wangari, I've seen a question here asking, are we near a turning point as an economy? Are we far away from it? What assessment can you give?
Well, in any, since time immemorial, the economies also always have peaks and troughs, right? We had peak time, I think, maybe 5 or 6 years ago, just before COVID, things were picking up, and then COVID hit, it lined up with a recession, took us down even more, and so it's just a natural cycle of things, right? Yeah. I expect now, I think that the good thing is that when you're a recession, the only way is up. Right, so I think we need to tighten our belts now. We need to kind of look inward. We need to figure out how we're going to finance our budget and the Eurobond maturing. But things will look up. I think the economy is strong. I think Kenyans are resilient. I think opportunity for economic growth is there. I think economic growth last year was 4.8, so I think it's going to. I think there is definitely scope for increasing in future years.
Okay. Sandeep, we have about 6 minutes to go, so let's begin with our closing remarks. And let me start with you. And as you respond to that, there's a question which I've seen online, and it's to the effect that after 2 consecutive years of KRA blowing their revenue targets, it looks like this year they haven't had a good go at it. What do you think has presented a challenge as far as that is concerned?
I think the last 2 years, and we alluded to it, is really the amnesty programs that they had introduced. Even KRA had changed their approach in terms of how they do their audits. So they're doing desk audits, they're doing targeted audits, and I think that really helped them then. But like all things, all good things must come to an end for KRA, I'm thinking. But for me, I believe there's still a lot that they're doing, and I must applaud them for the technology that they're using, the items that we referred to, iTax that we talked about. And hopefully we'll get to integration of systems where the revenues then would be known, and there would be no more we call it the underground market, right? So eventually the tax base improvement is very critical for me, and I think that's where we should be heading, and that can all be done in partnerships. Okay. So we talk about partnerships with different associations. Let's talk about the Matatu Association. Let's have a joint effort. We see how this would work. Would that increase the cost to the end user? Possibly. But in the long term, this is how we increase the tax base so that the few people that are paying tax, and I think we talked about 6 million out of 18 or something million voters, only 6 million people are registered and paying tax, but everyone else could pay tax or is earning income but not declaring it. Why? The first challenge would then be the credibility and accountability. The government needs to build trust, and I think the provision I alluded to earlier would be, if deleted, would really build credibility and trust for the public of Kenya, and then looping in the remainder of the people that are not paying tax. How do you do that? I talked about the presumptive income tax. I talked about proper synergies between the national government and the county governments and how that could work. I think for us then, the only way is up, as Wangari mentioned.
All right. Thank you. Alex, your closing thoughts.
Back to why I think KRA didn't perform that well. I think we are also faced by a time when even disposable income, so the economy is not doing that well. So I think there's a relationship between how much disposable incomes Kenyans would have, and then to the tax that then KRA would collect. So if they're not doing well, then government won't do well. But in terms of looking ahead, expect a lot around what KRA is doing around digital platforms, what KRA is doing around getting data from other sources that government already has. If they could improve on that, so that government is speaking to government, then they have information basically of who is earning what, and then try to see if they are in the tax bracket. As an example, for example, you have someone registered within TSA, they have 5 cars as an example, they're not paying any tax, so where did they get the money to pay for these vehicles? How did they obtain these vehicles? So it means that perhaps they're making some money, but that KRA is not getting their fair share. So if they're speaking to each other in terms of the government, then perhaps that would help.
Okay. And you seem to imply that the data is there anyway.
Yes, the data is there.
I see. Wangari Muke, your closing thoughts.
I have just a couple of points. I was thinking in terms of the finance bill trying to widen the tax bracket, I think that's great. I think it's important for the government not just to tax the small percentage of individuals who are already paying taxes, because then you start to see tax evasion. So widening the bracket is good. The housing levy is premature. I don't think it should be the focus. It's one of the Kenya Kwanza initiatives, but I don't think it should be the focus now. They should be focusing on cost of living, which is something that is quite hard right now. I think in terms of revenue channels, dumping the KQs and the Kenya Powers, which are really a drain to the economy. And I understand that they're big assets that have larger benefits. But if you're how many years loss making? Then you have to really think about where that's going. I also think about the parastatals. A lot of the parastatals receive money from government transfers, and that money stays into their accounts, and then they lend that money back to government. And I think that is an opportunity to rethink about how much money you're sending to parastatals and whether that revenue channel can be plugged back in. I think about CDF also, because CDF is also one of those funds, a national government fund, questionable in terms of the devolution, where it really has a space. It's about 47 billion every year. Can that be repurposed? I don't want the MPs coming for me, but I think if we're going to think about austerity, like you said, Alex, if you're going to take from our pockets, even government, what are you doing in turn? I think we need to think outside the box. And I think the last one, we didn't talk about the import levy. The Kenya Kwanza, it's called the export investment levy on imports. Levy. If Kenya Kwanza is talking about boosting the manufacturing sector, yes, the idea is to tax imports that we can generate here. But if you've not created the fertile grounds for those industries to thrive, then you're almost you're increasing the burden, because they still have to get those raw materials, and then they have to pay on top of that the export something levy. So that's a challenge.
Promotional levy.
Yeah.
Yes. Thank you so much, Wangari Muke here, Sandeep. On the point of the export investment promotion levy, I think the oxymoron is being an export and investment promotion levy. The word is levy anyway. So thank you so much for your insights into this conversation. Thank you so much to the viewer for your questions. There was an issue around loss-making state corporations. Someone actually asked, what became of minimum tax? Conversation for another day. We have to close it at this point. James Smart is coming up with the news, and he also has his show, With All Due Respect, which will also be tackling matters of the budget. So stay tuned.